Well, hello and welcome to the weekly update here on YouTube. So, they have been telling us that they've been doing an incredible job. The Federal Reserve is amazing. They're being able to bring down inflation, destroy demand, send banks collapsing, raise rates on people's mortgages, credit cards, and other variable loans to the point where they're feeling incredible financial pressure. But they've done their job by bringing down inflation. Or did they just change the rules? Now, you can go back and look at my YouTube videos and you'll see that I'm one of the very few people that spoke about the change in the way that they measured inflation. They're telling us right now the inflation number is 6%. If you look at the real number, not the CPI number, but the actual number, probably closer to 13%. But they've been telling us that it's been moving down, right? Their policies are working. But like I mentioned to you guys a few months ago, that at the beginning of this year, January 2023, the Bureau of Labor Statistics changed the way that they measured inflation, right? They plan to update, right? Update the spending weights in the calculation of CPI inflation every year instead of every 2 years. Well, Sean, what's the big deal about that? They're going to do it every year instead of every 2 years. Right? They've always done it every 2 years, and now they're going to do it every year. They've changed the rules, but so what? Well, let's have a look. Let's have a look at February, for example, right? So we're at the 6%, where the last time they've told us here, right, 6%, what the inflation is. If we compare it to a year ago, remember, that's the new change, measuring it every year instead of every 2 years, right? So if we look at it from where it is now to 1 year ago, the new way they're measuring it, inflation's come down 1.9%. Brilliant. Federal Reserve, you've done an amazing job. The government's done an amazing job. They've brought down inflation by 1.9%. But if we look at it from 2 years ago, which is the way they've always measured it until they all of a sudden decided to change it at the beginning of this year, if they compared it to the way that they used to do it, just as of last year, it would actually be up, increased by 4.3%. So what sounds better? Inflation has increased by 4.3% or inflation has decreased by 1.9%? Well, it's pretty obvious, isn't it? If things aren't going well for you, if people are seeing right through your policies, if they're seeing that you're the ones causing the problem, that the CPI is not the CPI, it's the CPI, what do? Just change the way you measure it. Change the rules. We've brought down inflation by 1.9%. Are we geniuses? Goodness me. And we all know that this is absolute rubbish anyway, the fact that inflation's coming down. Food in January was up 10.1%, shelter up 7.9%, transportation up 14.6%. And this is something that is a big issue, right? People were eating a lot of beef up until 2019, and now what's happened? The amount of consumption of beef has gone down. Why? Because it's a more expensive meat, right? People can't afford to buy it anymore. And this is what we are seeing now. People are changing their habits just to make ends meet. This is called financial repression, my friends. It's a deliberate government policy. And we know that regardless of how well they're telling us they're doing by bringing down inflation that they caused in the first place, we're seeing a huge amount of job cuts. People are losing their jobs at a dramatic rate. US employers announced over 270,000 people lost their job in the first quarter, up 396% from 2022, just last year. So they're telling us that they're doing really well. They're winning the fight against inflation. But what are they actually doing? What are the central banks around the world doing? Look at what people do. Don't listen to what they say. So what are they doing? Central banks around the world are buying gold at the most rapid pace they've bought gold in history. They've never bought gold at these levels before. Why? Because they understand there's a perfect storm coming. What is the perfect storm? AI, artificial intelligence is going to drive job losses. The tax base is shrinking. High income earners are escaping high tax regimes and moving to lower tax countries. People are becoming older, and mandatory spending is exploding. So what does that mean? Well, obviously AI is replacing a lot of things that people do right now, manufacturing and a whole range of different things that AI is going to cause job losses with. The aging population means there's less workers to pay tax, which means that the governments will be forced to spend more on what? Centrelink, social security payments, and welfare payments. And high income earners are escaping to lower tax countries. That is the perfect financial storm, my friends. That's what's actually going on, regardless of how exceptionally well they're doing fighting inflation. Anyway, back to the markets. Right now, the VIX, the fear gauge of the market, is very low. It's at 15.79%. If we look at the fear gauge, we can see that it is still in the greed. Not extreme greed, but a greed, right? So we'll keep an eye on that. If it does get to extreme greed, you need to be mindful of what Warren Buffett says. Be fearful when others are greedy and greedy when others are fearful. So we'll keep an eye on that. The skew, the perceived risk of a market crash, when it's above 135, it means, like it is now, it means that the market is, or the smart money, is worried about a market crash. The market's not, because the VIX is so low at 15.78, right? Anything below 20 is low. But it also means that the market's free to sell off. So just keep a close eye on that. Now, as far as our opening range goes, we are bullish. As of Friday, we moved up. Why did we move up? Well, let's have a look at last week. We had advanced GDP quarter over quarter. That was worse than expected. But the advanced GDP price index quarter over quarter was better than expected. What's the difference? Well, the GDP number here is something that we are looking at as far as the GDP figure doesn't take into account, does take into account the price changes for imports, right? So it does include imports. Whereas the advanced GDP price index, which only measures inflation in the price of goods and services produced in the United States. So what they're saying is in the United States, it's going well. Okay, and again, the market took that as a positive and it went up, right? We've seen a couple of days to the upside. Now, as far as economic news that's coming out this week, let's have a look at that. The Federal Reserve's coming out, talking about interest rates. Are they likely to raise interest rates by another 0.25%? With the First Republic Bank looking like it's going to collapse as of Monday. Another top 20 bank that has collapsed. They are starting to break the system. This is a problem. They're going to have to pivot at some point. There is no doubt about this. But are they going to raise rates again by 0.25%? Potentially, right? Could very easily happen. So keep an eye on that. And a lot of employment data coming out this week. So it's a pretty important week as far as the markets go as well. Bitcoin, I spoke about this last week, this number of 27,000. I said if it breaks that, it's likely to go down to 25. If it holds, obviously it's going to move up, right? So it held exactly where I drew that line, and we're trading now up over 29,000 USD for one Bitcoin. So we'll see what happens there. Lot of things that can happen, right? Now, as far as MicroStrategy, one of the trades that we are in, that had a nice move, up over 3% on Friday. We're doing exceptionally well with our trade here. We got in it back here. We're doing extremely well on that one, right? We are absolutely crushing it with our synthetic stock position. Now, another position that I'm looking to get into this week, just to give you something here, is on Salesforce, CRM. So have a look at this. It's running into resistance here at 199. Now remember, resistance, you should think of it as a zone, not a specific price. So between 195 and 200 is that zone, and that's sort of where it's hitting up against now. If we have a look here at the weekly, it's right up against the 200-day weekly simple moving average. So what I'm looking for Salesforce to do is sort of stay about where it is. So what I'm looking to do with this one is I'm looking for it to stay within a range, okay, between 205 and 185. right? Staying anywhere in between there, and I'm going to make a 5x on my money. 5-to-1 reward to risk on this one, right? Pretty good deal. For how long? 18 days. So if it stays anywhere between 205 and 195, I make 5x on my money. I don't have to predict exactly where it's going to go. I don't need it to make a directional move up or down. I just need it to simply stay around where it is now, right? So that's a specific trade that our members are getting into right now, right? To give you guys a little bit more information on that. Now, the other reason that the markets have held up, as well as that GDP price index being favorable, you can see it's been moving up here. And it's because we've seen a couple of large tech companies come out with some pretty decent earnings. One of them being Meta, right? So let's have a look here at Meta. When you get large companies like this that have a huge weighting in the market doing well, look at this, good earnings, having a nice pop there from around 210 to 240. Another company that did well was Microsoft, and some more good earnings here. That moved up considerably as well. Google sort of barely had good earnings and didn't really do much of anything. So, a couple of big companies, Microsoft, Meta, that had really good earnings, and that's another reason why the markets are holding up. We've got more earnings coming out this week, so we'll be keeping a close eye on that to see how the QQQ, the NASDAQ, holds up, right? The tech sector is the largest sector in the stock market, so we've got to be keeping a close eye on that and looking for companies to report more earnings this week. Okay, going to be a fairly decent week as far as that goes. All right, my friends, hope you enjoyed that. I hope you enjoyed the analysis. I'll talk to you again next week. All the best, and bye for now.